Every tax season, I meet business owners who filed IRS Form 2553 before ever talking to me. By spring, they're staring down a business return, a personal return, and a bookkeeping requirement, caught off guard by the maintenance the savings require. The S Corp election is real savings, but it's also a real job. An S Corp can be one of the most powerful tax saving structures for a small business, not just self employment tax but retirement contributions and health insurance too. It's not about hitting a magic profit number either. Some owners elect from day one, even with losses, simply because they have multiple owners and the structure fits. The trade off is real, ongoing maintenance, payroll, a separate business return, bookkeeping. First, let's clear something up. An S corporation isn't a separate legal entity, it's a tax election. Your business stays an LLC or corporation, you're just choosing Subchapter S tax treatment, where income and losses pass through to your personal return, avoiding the double taxation a C Corp faces. You elect by filing Form 2553, and once accepted, you generally keep filing as an S Corp every year after. So, where do the savings actually come from? Four real levers. 1. Lower self employment tax. As a sole proprietor, all your net profit is hit with self employment tax plus income tax. With an S Corp, you pay yourself a reasonable salary through payroll, and whatever's left can be distributed without self employment tax attached. The word reasonable matters. The IRS pursues businesses that skip payroll or lowball the salary. 2. Bigger retirement contributions. Because you're on payroll, your business can contribute up to 25% of your W 2 compensation to your 401k, deductible to the business on top of your own deferral. Contributions are based on wages, not distributions, so that salary number matters again here. 3. Business paid health insurance. Your business can pay and deduct your premiums as long as they're included in your W 2 wages. They go in box 1 but are excluded from Social Security and Medicare wages, and you can generally deduct them again on your personal return. 4. Accountable plan reimbursements. With a written accountable plan, the business can reimburse you tax-free for the business use portion of your home office, cell phone, mileage, and internet as long as the expense has a business connection, is documented, and any excess is returned. So when does this make sense? There's no single profit number. Some businesses elect from day one, even with losses, because there are multiple owners and the structure fits. More often, it's a business that's never made the election and has been paying meaningfully in self-employment tax. Look for three things. You qualify for S Corp status, you can afford to run payroll consistently, and you're ready to take on the compliance work for the savings. None of this diminishes the savings. It just means the structure has to be run properly. Here's what an S Corp actually requires once it's in place. 1. A separate business bank account and credit card. No commingling. 2. Payroll setup, an EFTPS account, state unemployment and withholding registrations, and a payroll provider like QuickBooks Payroll or ADP. Set these up early. 3. Ongoing payroll funding, enough cash on hand every pay period, since missed deposits trigger real penalties. 4. A separate business tax return, Form 1120S every year, separate from your personal 1040. And 5. Clean bookkeeping and complete owner information. Get everyone's social security number on file when they join, not after they've left. Timing matters. The election generally needs to be filed within 2 months and 15 days of the start of the tax year, typically March 15th for calendar year businesses. File late and you may lose the benefit for that year while the compliance obligations still kick in. So before you file, run the numbers, a reasonable salary, the profit left for distribution, the actual self-employment tax saved, and how that compares to your payroll and compliance costs. If the savings clearly beat the cost, or there's a structural reason like multiple owners, it's worth doing. If it's a close call, it may be worth waiting. An S Corp is one of the strongest tax saving structures available to a profitable small business, but only when it's run properly. I offer a free 30-minute consultation, and you'll find the booking link in the description below. If you found this video helpful, please give it a thumbs up and consider subscribing for more practical tax and bookkeeping tips for small business owners. I'm Vani Murthy, CPA with AZ Edge Accounting. Thanks for watching, and I'll see you in the next video.